I'm going to get straight over to senior economics reporter Steve Leisman. He's got some breaking news this morning on the future of that American sovereign wealth fund that we've heard so much about earlier this year. Steve, what's going on?
Yeah, thanks, Andrew. The Treasury is moving ahead with all this tumult going on elsewhere. It's moving ahead with President Trump's aggressive plans to create a U.S. sovereign wealth fund. CNBC has learned that top Treasury officials met yesterday in Washington with former Fed, former Treasury officials, and economists from top Wall Street investment banks to get feedback and to discuss how it could be structured, how it could be funded, and what it would buy. Presiding over the meeting was J.R. Gibbons, a former fighter pilot who worked at an investment bank, founded a tech startup, and also led an effort at the Department of Defense to attract private capital to support national security. A Treasury spokesperson confirmed the meeting but declined to provide any details to CNBC. People at the meeting, though, said the discussions were a mix of talking about ideas and participants expressing some skepticism about the whole idea of a sovereign wealth fund. Among the discussions were two potential funds, one that builds wealth for future generations, for example, monetizing land owned by the federal government. Another might invest in economic security, things like rare earth metals. The included funding, whether the government should issue perhaps debt approved by Congress and capture the difference between the interest rate on the debt and equity returns. Also discussed was governance, including the idea of an independent board, but concern that such funds was expressed that they can be rife with cronyism and corruption. Also asset purchases. What should the fund buy, including even should it buy foreign assets? Now, some on Wall Street have jokingly asked, where's the source of wealth for the sovereign wealth fund? Most countries that have these kind of funds have a flow of funds, like from oil or other things, to invest. Treasury appears to be far from any decisions, but Secretary Scott Bessent has said publicly the fund could be up and running in a year. The president's executive order from early February tasked the Treasury and Commerce with a report, guys, as soon as early May.
Okay, Steve Leisman, it's a fascinating one. What do you think the prospect, given everything else is going on in the world between tariffs, the budget that has to get somehow resolved this year and everything else, that this is really on the front burner? I know they're having these meetings, but if we're talking in a year from now, do you think there is a fund?
I think there's a long way to go, Andrew, but let me just talk real quickly about what's happening in the 10-year. There is some concern out there and some discussion about what is moving it. The first thing I think to talk about here is the idea that both the 10-year and the dollar are moving counter to what you would expect in what would be a flight to safety, and that's causing some concern. There's talk about what China is doing and what it might do. There's a $39 billion sale at 10 years today that could be the event of the day to see how that happens. With some discussion, guys, about what's also happening in the plumbing. Right now, the plumbing seems to be a little bit tight, but okay. The kind of stuff we talked about in the great financial crisis seems to be a little tight, but okay right now. And then the issue becomes, what should the Fed do? Should the Fed be thinking about some kind of what they call market functioning asset purchases? And if we are in a place where we're repricing things for some kind of permanent new future, then the idea is maybe the Fed should not come in here. So there's a lot of discussion out there among market participants about what's going on, why it's going on, and how the Fed might or should respond.